Becoming a Forex trader. This is Isaiah. Welcome, hi to man. Another episode. So on this episode, we're gonna get more technical and get into time frames. The last episode we talked about support and resistance lines and what role they played and how to enter the market using the support and resistance lines. So now we got all the nitty gritty out the way. We're gonna get into the actual time frames. So let's jump into this. So there's three purposes of time frames. First, the first time frame should be the higher time frame, and you're gonna use this time frame for direction. When I say higher time frame, this time frame could be anywhere from a month time frame, a weekly time frame, day time frame, even a 4-hour time frame, or even a 1-hour time frame. It's whatever you're mix and matching with, So the higher time frame is for direction. Now I'll show you guys exactly how, for example, what time frames I use and why. It's exactly for this reason. So three purposes of time frames is higher time frame for direction, confidence in bullish trend bias or bearish trend bias. The second time frame should be a middle time frame for letting you know if it's time to trade or to wait. So this middle time frame is showing you buy and sell opportunities. And last but not least, the third time frame should be your lowest time frame, your lower time frame for entering the market with minimum risk and 3 times the reward. So let's look to see how that looks when I show you guys the time frames that I use. So first, I use the monthly or sometimes the weekly time frame for the direction. It helps me build confidence, the confidence to hold your trade even when the market is going against you. Some of you guys who actually already started trading, you guys know how that is. The market goes against you, and you start to lose confidence on if you should hold this trade or not. I use the larger time frames to give me that confidence to be able to hold the trade if it's going to give me a few pips, depending on where my stop loss is or etc. Or even if you have a stop loss. Alright, so the next time frame would be, I use the daily time frame, sometimes a 4-hour time frame as well. The daily time frame, it tells me when to trade or if I need to wait. So I'll give you guys an example on the live chart in a second. Right here, the daily time frame just tells me when I should trade. It tells me if I need to wait, or it tells me if I need to get in or look for opportunities right now. So it tells me buy or sell opportunities, and this is to follow up with my trend bias. What do I mean by trend bias? It means this. Let me highlight this for you guys. Trend bias. I'm using the monthly time frame to tell me the overall direction. If it's in a bullish trend in the monthly time frame, then I'm going to be looking to buy. So I'm looking for buy or sell opportunities to follow up with my trend bias. So in the monthly time frame, if I'm bullish trend bias, then that means I'm favoring the upwards trend more than the downwards trend. So if I'm favoring the upwards trend, I'll be looking for low prices in the market to buy. So I'll be looking at my daily time frame to look for a low price to be like, okay, now it's time to either wait for that low price or to buy. Okay, that's a good example. Okay. And last but not least is the lowest time frame. And I use the 1 hour time frame. This 1 hour time frame helps me enter in the market with an entry of low risk, smaller than 100 pips. And this ensures that I enter the market at a good position to minimize my risk and to triple my profits. And that's the whole goal. So I use the month to figure out if I'm bullish or bearish, trend bias. And then I look for it in a daily time zone, the time frame, to see if I need to wait it out or if I should be looking for opportunity or etc. And then I use the 1 hour time frame to help me place an entry with low risk, basically a good position trade. And that's what it looks like all together. So take notes on this because it doesn't exactly have to be like this. You guys could mix it up. You guys can mix it up like this can be the hour time frame. This could be the 30-minute time frame. And this could be like the 5 minute time frame right here. Boom, like that. You guys can mix it up just like this. So it can be whatever. It can even be even 15 minutes. There we go. It can even look like that. You guys will mess around and start playing around with the markets to see if you guys can place trades off the knowledge that you guys already have. But yeah, it doesn't exactly have to be a month, a day, and a 1 hour time frame for these. Just make sure you guys understand the concept of the time frames that you look at it like this. You look at the time frame for confidence, when to trade, and where to enter at. So yeah. And I forgot to bring this up in the candlestick video, but the time frames of candlesticks right here. When selecting a time frame, that time frame represents a single candlestick on the chart. So how I said I was going to the monthly time frame. If I went to the monthly time frame, each candlestick will represent 1 month. So that means within 1 month, it opened right here, and then it went up a few hundred pips, and it closed up here. It went this high, but it came down and closed it right here. If you guys don't remember the candlesticks, go to the candlestick episode and just review that. So same with the bearish candlestick right here. It opened up right here in the month, and then it closed down here a few hundred pips, whatever. But yeah, each candlestick represents that time in the time frame. So if you're in a weekly time frame, each candlestick represents a week. So this candlestick won't close until the week is over. Same with the day time frame, the hour time frame, 30-minute, 15-minute, 5-minute, 1 minute. Each candlestick represents whatever time frame that you're on. Alright, so open up your MT4. Open up your MT4. So if you open up to your MetaTrader 4 apps, you'll see the time frames is on the top left of your chart. You'll go to your chart and click on the time frames. MN, this means month. W1 is 1 week. D1, 1 day. 4 hours. 1 hour. 30-minute, 15-minute, 5-minute, 1 minute. You guys have that on the MetaTrader 4 app. And as you guys can see, we're in the month right now. We're in the month time frame. So each candlestick represents 1 month. So that's 1 month, 2 months, 3 months, 4 months, 5 months. So as you can see right here, for 2 months, it's been in a bullish trend. It's actually been in a bullish trend for the last 1, 2, 3, 4, 5, 6, 7, 8. About 8 candlesticks for 8 months. It's been going up. So if you just placed a buy 8 months ago, you'll be making money right now. So yeah, that's basically how the candlesticks, uh, represents the time frame. So let's go in to trading view. I want to show you guys something, give you guys a good example of time frames. So in the trading view, I never actually went over the time frames with you guys, but now we're going over time frames. So usually you guys would see me on a day chart. I didn't really care what time frame I was on, but yeah, so let's give a good example. This is a perfect example right here to understand the time frames. If we're in a day chart right here, boom. So we're in a day chart, and this is a trend line. Let's do another trend line. You remember this same trend line I'd be making in these videos. Boom. We just really love the euro. Let me fix that because that looks sloppy. Boom. Alright, so this is a trend lines in the day chart. So if we go into the 4-hour, what does it look like? Oh, I'm zoomed in now. It doesn't look as small as it was. Now it looks even bigger. Let me just go back. So let me even zoom out. And actually, right here. This is a good example. So, I mean, this candlestick right here represents a whole day. Let me see. This candlestick represents a whole day. And if I go into the 4-hour, as you can see, it's not done forming. If I go down to 1 hour, all this now is equal to 1 day. So that's a perfect example of a candlestick in the time frame. So that was just 1 day in a candlestick. So let me actually zoom out for you. Yeah. So if I zoom in, that trend line looks crazy big now. You can't even see the outer trend line. Well, you can't even see the long-term trend line. There we go. So let me zoom in for y'all. So as I zoom out with these candlesticks, it's just a different time frames. Each candlestick represents whatever time frame you have it on. Go back to the day, zoom out. I'm gonna go into the week. Boom. All right. Now you're getting the gist of it. Actually understand it. Like, okay, so it's been going up in a bullish. It's been in a bullish trend within these days right here on these candlesticks. Well, these are weeks actually. Excuse me. This is weeks. So if I go to months, you see how that trend line it just looks really small now. And as you can see, it's actually been in a downwards trend. It's actually been in a downwards trend and not an upwards trend. It's just now recovering from a downwards trend. But yeah, so as you can see, it's still a bullish move in the month time frame. And if you jump into the 1 hour chart, that will give you the confidence for you to hold your your buy trades if it goes against you. You know. That's exactly what it is. I wanted to give you guys an example of. Yeah, there we go. I got you guys right here. Let me just mess up the chart real quick. There you go. Okay. This is the best I can do for it. Alright, here we go. We got paint right here. This is perfect. So we got a brush. So let's make that thick. Alright. So let's say the market is going up like this, making high points and higher low points. Boom. So let's say this is a month time frame right here. This is a month. So that's the month time frame. So it looks really smooth, just going up, down, up, down, up. So let's add like the day time frame on there. This is a day time frame. Add the day time frame. So if we add the day time frame, it's gonna look more going up and down, up and down, up and down, up and down. So, and then if we add it right here too, boom, it's gonna look like a downwards trend. It's looking like a downwards trend right here. It looks like a downwards trend. Actually, let's use this one right here. So this is a day chart right here, just up and down, all in this one, like going from the month into the day. The day looks more choppier than the month because there's way more candlesticks. There's way more day candlesticks. There's about, I'm just gonna say like 25. I don't know. There's probably like 24 candlesticks in a month time frame because the market isn't open on the weekends. Okay. That's just a side note that just to get you guys to really grasp this in your head. So the day time frame is going down. It looks like a straight downwards trend. But if you zoom out to the month time frame, you can see like it's about to reach some support right there, and it's actually, oops, let me do that one. It's actually a upwards trend. Sorry, my lines are terrible. It's actually an upwards trend. Let me get this. Boom. There you go. So this is the example I'm trying to get. This is my point. In the day time frame, it looks like a downwards trend, but in the month time frame, it's an upwards trend. This allows us, see, in this right here, we make a counter trend line right here, and this looks like a buy if it breaks our counter trend line. You guys remember the counter trend line. So we're looking at the days to show us a good opportunity, and then we go into the 1 hour. We go into the 1 hour. Boom. We're in the 1 hour. The 1 hour just looks crazy. I'm just gonna. It looks crazy, but we actually zoom all the way in. It starts to look neater, and we just look for buy opportunities, buy in, make money, all that. But yeah, that was the example I was trying to get you guys. All right. So my point is, just because it looks like a downwards trend on one time frame, zoom out to the higher time frame to see um, what's like the overall trend going to give you that confidence. But yeah, that's pretty much it. That was a 20-minute video. That was pretty good. So we learned about the purpose of time frames, how time frames help you with direction to enter and confidence. Learned about time frames helping you with when to enter the market or should you wait. Learned about time frames helping you to lower your risk as well. So yeah, congratulations. This season is almost over. I think I'll probably going to do one more video, one or two more videos, another video with like everything all put in one, so you guys can just feel the flow of everything that you guys learned. Just put it in one video. But yeah, you guys should be proud of yourselves for taking initiative to really learn this and put that effort down and discipline on yourself to, to achieve that next level of financial success. This is just going to be another stream of income, probably a primary income for a lot of people. It's a lot of money to be made. All right, let's get it. So I want you guys to also follow me on Instagram, I_Steezy, STEEZY. I'm gonna put it in the information and YouTube in the information box, and then also add me on Facebook or message me on Telegram, and just send me confirmation that you guys are watching these videos and you guys are understanding what I'm talking about and you guys are following along. If not, hit me with your questions. I'll go over I'll probably remake a few videos, or I'll just answer your questions on the spot. But yeah, I want you guys to really just reach out to me and let me know that you guys are really learning this. All right, let's get it. Hi, the man.